to the Futures Edge, the Unfiltered Flash, which is the short form video by request from you people, short form video of the Futures Edge. We today are talking about something that Bobby and I have been beating the drum on for the last 2 years, and that's gold. Bobby and I have been, gold bugs is a difficult way to say it because we're not. We just thought it was the place to be for the last 2 years based on a couple different factors that I'll put forth real quick, and I want to hear Bobby's take on it right now. One is the fact that they were devaluing the hell out of the dollar. The dollar now is worth about 70% of what it was just 3 short years ago. Plus, that doesn't mean that assets denominated in dollars go up 30%. That means, based on my thumbnail, that they go up about 42%. So that's what gold is reflecting. Also, the potential for global de-dollarization, which I don't think is something that is a big long-term systemic worry, but I think it's enough of a worry to propel gold higher. But as we both know, getting into a trade is the easiest part of the trading thesis. The two harder parts are knowing when to cut a loser. And I think what the real hardest part is, which I'm having a difficult time today, so I'm looking forward to what Bobby's going to say, is how to manage something that's a runaway winner like we've had on our gold trades. Bobby, what do you think?
Well, number one, if I'm talking about trades, as you just mentioned with gold, I use GAN extensions, and I'll get out, wait for a pullback and get back in, and then do another GAN extension. It's a pretty simple process once you have it down. But my sort of fundamental target for gold is at least 3,000 at this point, in part because of what you mentioned, right? Poor stewardship is not ending right now. I don't see it ending. I don't see it going anywhere. Number one. Number two, we got BRICS who are trying to exercise their theoretical right to have a gold-backed currency. I don't think central banks are going to stop buying gold anytime soon. And number three, and you and I are sort of on opposite ends of this, I see almost no way that inflation doesn't reignite here. I've only got a couple of things going against my thesis. One of them is a big one, manufacturing PMIs, which don't look good, but the regional surveys look good. And if inflation reignites, the one time where you see equities and gold go up at the same time is when there is inflation present or coming in the future and the Fed's not fighting it. I think currently we're in that situation. So I still love gold.
You know why I'm agreeing with you more about the inflation thing? This port strike could be quite a big deal. You know what I mean? Because there's two different aspects to it. The overwhelming big part of the inflationary thing is a supply chain breakdown. These guys are the tip of the spear for the supply chain. Obviously, don't have to tell that to anybody. But secondly, it underscores the second derivative of the wage price spiral. There are unions all over the country who are like, this is bullshit. Prices have gone up way, way higher than my salary has. I want to get mine. I fault them not at all for that. Then comes the upcoming election too. I think one candidate is good for gold because he's a profligate. I won't mention names, but he's a profligate spender. He's a profligate spender and he's a deregulator, which could be a little bit inflationary too. But I do think rates will be held higher in response to him winning. She's a profligate spender and a heavy regulator too, which could cause the Fed to lower rates to counterbalance that. So the he's a good candidate for gold. The she is a great candidate for gold, in my opinion. Do you agree with both of those theses?
I couldn't agree more.
By the way, is theses the right word for multiple theses? Just came out. I don't know. You're better with those word things than I am.
Esai, I think.
Okay,
no,
good.
I made that up. I couldn't agree more. I think they're both spenders, and I don't think there's going to be any sort of political courage in Congress to turn that around. So when you look at it from that perspective, I don't see how anyone makes a case for a drop in gold that's substantial. I really don't. The only way that it happens is if you start making it, sort of a negative to not have the yield on gold, which you and I have talked about. There's ways to actually get yield on gold if that's your concern. It's not my concern. I think the price is going to appreciate.
So I have been, as you know, and I outline it real quick right here. I have been getting a yield on my gold. And again, you give up some of the upside. I've been selling call spreads against my gold position, not just in paper gold, but in my physical gold position as well. The thesis being is that I make the yield on the call spread, I sell it. If it goes up, I may lose some of the upside in gold. But what I have my long-term gold on is for the explosive parabolic move higher, in which case being short the call spreads won't matter that much. I'll just lose what's in it and I'll start gaining on gold to the upside too. And with that, you can get like a 4 or 5% yield on your gold, so it's not just dead weight. Scott Nations, every time we used to argue about gold, he'd be like, oh, it's like an expensive doorstop. No, there are plenty of ways to get your yield in it. Yeah.
Goes up 30% year to date. It's an expensive doorstop that continues to increase in value. I
You're
have
more
doorstops that
expensive.
they haven't budged since I bought them on Amazon for $5. They're not worth $5 anymore. So I think that's a silly way to look at it, that it's an expensive doorstop when you have something that's increased 30% year to date and is working on 9 of the last 12 months of positive price moves.
Yeah.
So that's that's an
Great.
accretive. An
It's crazy.
accretive. Is it accretive or accretive?
We're
It's
not, we're
accretive.
math people. We're not
Yeah, we're
words
not.
people. So you guys are going to have to go with us.
Yeah.
And accruative. Let's say accruative. Okay. Let's branch to silver and copper real quick. Silver obviously has a reputation, always has. You know, it lags gold, it lags gold, it lags gold, and then bam, it catches up real quick. Are we in the process of that right now?
Maybe. I mean, silver to me has always been an enigma. We've talked about this. Anytime I've tried to get in silver instead of gold because it's cheaper, the whole quadrant has turned around on me. So I've been staying out of silver. I have gotten back into copper. You know, there was a period of time where I was starting to turn a little bit short term negative on copper. And then the Fed started cutting rates way more than we need. So
Right.
you turn that into copper, into the manufacturing sector getting stronger, which is, again, another reason why I think inflation is going to start creeping up, because the rate cuts are going to help the manufacturing sectors globally. And then China drops this bazooka of stimulus as well, biggest copper consumer. So I'm very bullish short term on copper right
Did
now.
you see the chart of what's the Chinese stock market, the Shenzhen or whatever it's called? Did
Yeah.
you see the chart on that up 20% in three
Yeah.
days time? Jesus. It's
Well,
it's
part of
just
their stimulus, I don't know if you saw this, was they established a stock protection fund right out there in the open. And they increased
what
the
could
current
possibly go
value.
wrong? Yeah.
They increased the current value of the money that they already buy stocks with. So, I mean, it's Japan, but on a much larger scale.
Guys, and I cannot say enough. When I see things like that with the complete lack of any sort of responsibility, when the government steps in and starts distorting and supporting preferred assets and gets it away from market-based pricing system, you know what I want to buy more of? What we started talking about, gold and silver. And I probably want to buy it in a physical form too. Copper shooting through the roof. It accelerated hard on China. Do you still think there's an element of the electrification of everything built into copper? Have we lost that a tiny bit?
No, I don't think we've necessarily lost it. It might have cooled off a little bit, but I mean, I see copper as something that I see what it can be unburdened by what it has
What
been.
it has been.
Basically, yeah, because copper is just everywhere. It's involved in everything. We're going to get a spike in home sales as well, and that's going to spike stocks like Home Depot, in my opinion, and with these lowered rates, and that's going to cause people to replace their gutters, replace their wiring, and that's more copper usage. It's everywhere right now. It's kind of earning its Dr. Copper nickname right now, which I
So
hate.
yeah, me too. But I will remind people too that even if existing homes are saying, anytime a home changes hands, the new owner of it is motivated to make it the way they like. And oftentimes copper's involved in that. It's not just new home sales too. Now we got to go back to gold because, as you know, I am up to my eyeballs in gold, and I'm looking at this going, because I was asking you what's your advice on how I manage my position? Do I cover a quarter of it right now? Do I buy puts and sell more calls? What do you think?
Well, if you're talking about physical gold, you do nothing. You put
No, I'm
it in
not
your
doing anything.
safe.
Half of my position is physical, half of my position is
Yeah,
paper.
put your physical gold behind your gun safe and just leave it alone.
Put it right next to
The
the dog cage with
the
the door
futures
open.
to me is more of a buy the dip situation right now, rather than even cutting some. But if you're the kind of person, I'm not referencing you here, obviously, but if you're the person that has basically your allocation to gold, your money is in there, then yes, it's time to cut back 25%, 50% of what you want and buy back in on a dip, because there's going to be a dip. There always is. Things don't go straight up, especially in commodities. And when that dip comes, it's likely going to be sort of involved maybe in some Fed speak, maybe by Michelle Bowman, or maybe we get a slight rise in rates. We saw Treasury yields go up this week.
Mhm.
So maybe we get a little bit of that mixed into it, and gold starts to give up the highs there. But, we had 6 consecutive sessions of higher intraday highs, 5 consecutive sessions of higher intraday closes. Taking some off the table is not the worst idea.
I think that's what I'm probably going to do. Okay, that is about the length of an unfiltered flash futures edge short. There's a couple things I want to mention, some housekeeping things before we go. You guys are the reason we do this and why it's been so successful, and we are humbled and we thank you. If you want to support independent journalism like we are trying to do in the platform we're trying to build, please DM us, please retweet, please visit our sponsor's website, Hardcore Italians. It is funny. You will laugh. It's a perfect gift for the Italian or the wannabe in your family. They literally have a Halloween shirt that says Gabagool with a hand like this. Ghoul, get it? Ghoul. It's fantastic. We have shows coming up. You know, most of the shows we do are about finance, trading, and economics, but we also branch into politics, health, and pop culture. We have some amazing shows on health coming up. Dr. Robert Lufkin, author of The Lies I Taught in Medical School. Dr. Sean Baker, author of The Carnivore Diet, who's been on our show before, and we're going to do a short with him next week. Please look for that. Thank you guys for all the support. This has been the Unfiltered Flash.